What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. There is a special bonus with M1 Finance. If you sign up, I have my affiliate link in there. I'm pretty sure that from what I'm reading, that if you sign up, you earn $50 right away. So there is an affiliate link out there. I'll post the link in the comment section. But I just want to show you my dividend growth investing strategy and how it's working on M1 Finance. I'm also going to do a dividend stock analysis / stock analysis on the stock I sold, and it's killing me in the inside still. So first of all, I'm already mentally drained. I had a big exam yesterday. I just made it, which is like rare for me to say that I just made it, but just glad that's over with. And it's time to refresh and recharge. And I definitely put some money in my M1 Finance dividend portfolio with the big dip in the market today. So let me just show you how things are looking. Let me show you this stock at the end of the video. I'll do it later at the end, but I just want to show you how my dividend growth investing strategy is working with my monthly dividend stocks and my quarterly dividend stocks. So as of right now, I'm up 107.86%. I have a gain of $5,762.32. Market gain is $4,909.02. Earned dividends, $8.50. I almost said $8. $853.30. I'm very excited to see this dividend portfolio grow. I'm just going to show you my holdings. Let me just show you my activity real quick on stocks that I bought. I bought a little bit of Jeppy, One Oak. I did a video on those guys. I bought some Nusi, monthly dividend ETF, Devo, and Remol, which is a covered call ETN. So that's one that it's kind of like a scatter bomb. And I'm just going to show you my holdings, how things are looking right now. Specifically, we're going to start from top to bottom. Iron Mountain, I'm at 60 shares. LTC Properties at 47.2. QYLD at 31. Verizon at 28.2. RYLD at 27. So again, QYLD, RYLD, and XYLD, once I get to right around 100 shares, that's where I'm really going to start racking up the compound interest and the passive income with the monthly dividends, and I can really start doing some damage on these quarterly dividends and start buying some more. B&G Foods, I'm at 25.77. Omega Healthcare Investors, I'm at 25.33. Pfizer, I'm at 24.01. I'm almost at that 25 mark. British American Tobacco, I'm at 20.9. First Energy at 19.80. Pembina, I'm at 19.02. Altria, I definitely need to get these guys up there. They have a reputation of being a dividend, how would I want to say it? They have a reputation of being a dividend stock that's a very big sin stock, and they increase their dividends over time. I feel very confident in these guys. I had to like stop and think what I was saying because, they have increased their dividends over time. Now, are they going to keep their title as, a stock that has increased its dividend over time? Is this the year where it's going to decrease its dividend? I don't know. But I feel very confident in this stock. Spirit Realty Capital, I'm up 30.58%. I'm at 16.43 shares. Enbridge, I need to get up there. Coca-Cola, I decrease its percentage a little bit because I'll start buying more of those stocks later on. UVV, I'm at 13. Exxon, I'm at 13.24. XYLD, I'm at 12.78. Brookfield Infrastructure Partners, I'm at 11.46. Brookfield Property Partners, I'm at 10.37. Physicians Realty Trust, 9.47. Plymouth Industrial Rate, 9.02. Nusi, I'm at 8.69. Agree Realty Corporation, 8.69. I need to get to 100 with Agree Realty Corporation. Dividend growth is its rate. It's actually better than O, and it's actually more expensive than O, which is crazy. Medical Properties Trust, I know it's down. I need to capitalize on that one. RA Brookfield Assets Income Fund, a very good income fund. I'm debating if I should just sell it and throw it into other stocks. I don't know how long I'll be in with those guys, but I get a nice 19 cents out of these guys. So it's one thing to consider. Unilever, I'm at 7. Telus, I'm at 7.58. One Oak at 7.02. Devo at 6.82. Healthcare Trust of America, 6.66. Office Properties Income Trust, 6.36. SLVO, 5.78. AT&T 5.78. This is the REML. This is a mortgage rate ETN. So that one is, it's going to be down, but my gosh, it's like a scatter bomb the way it delivers dividends. So it's a really interesting one. Jeppy, I'm only at 2.45. I really need to get that one up. So you're seeing what's going on, but this is the thing that really quirks me, and it stings so bad. I sold Seagate Technology, and this is such a great dividend stock, a great dividend growth stock that I had, and it just blew up so fast that I couldn't keep up with it. And it gave me a nice dividend, but it sucked to get rid of this stock because it blew up so fast, and I really couldn't put some money into it with my M1 Finance dividend portfolio because the percentage blew up. Just like what happened with IIPR, I was up like 25, 30% IIPR. I couldn't do anything with it. There's no way I was going to buy more shares, so I had to sell it. I'll probably rebuy it, and I'm going to do a quick stock and dividend analysis on Seagate. So let's check this out. So Seagate in the past 5 years has beaten the S&P, which makes it a very attractive stock, and it really blew up fast. And it's at $86.50. I had it right around here when it was like in its 40s, and all of a sudden it just started blowing up, and I couldn't keep up. There's nothing I could have done to keep up with it. I had to sell it because if you look at its previous trends, I mean, my gosh, 30s, 40s, way up to $86. But what are these guys doing? What makes them so like special as a dividend stock? But let's check out, see what they're about first, because you're going to buy something. This is kind of like in the semiconductor industry, very well diverse stock. Symbol is STX. Let's check and see what products they carry, because you need to know what you're getting yourself into. I knew what I was getting myself into, and thank you, Matthew Ramey, for posting this on your website, because I never even thought that Seagate would be a really good dividend stock, and this is why I bought it, was because of Matthew Ramey's model. So I'm going to just jump to this stock and show you how things are looking. These guys are in the cloud business, backup infrastructure. They have storage workflow. I mean, these guys, they have hardware, software. Their hardware is very impressive. They have the live cloud, the live mobile, the live managed integration services. I had to stop. And Cortex is a fully open source object storage software for mass capacity workloads. So you see, these guys are in demand. And I'm just on some of them. So their software is really good. I'm sure you've seen the enterprise drives. I'm sure you have seen the logo on Seagate, especially with your electronics. And it's just amazing how impressive these guys are with data protection and their backup and recovery solutions. Everything they carry is phenomenal. I want to show you how they're doing revenue-wise. This is what's incredible with these guys. I mean, they're powerful in the semiconductor business, and they just generate a ton of money. So it makes sense why they're doing so well. So let's jump to that. So Seagate has been increasing, okay? One point there was a decline, but Seagate is slowly increasing its revenue. And again, it's $10.50 billion in 2020. And okay, you can see a little bit of a increase. So they're in demand. I mean, they're a $10 billion business, $2.731 billion last the quarter, a 0.48% increase in year over year. So these guys are in demand. Now, here's the thing, what's even more amazing about these guys. And this is what I love about these. This is what I love about these guys. 8 cents, 10 cents, 12 cents, 18 cents, 25 cents, 32 cents, 38 cents, 43 cents, 54 cents, 63 cents, 65 cents, 67. So it is consistently, God, I can't even talk today. It is consistently above 67 cents. It's just jumping up. It's going to probably increase its dividend and has a PE ratio of 21.57, a dividend yield of 3.13%, annualized dividend of $2.68. So again, it's probably going to be above 67 cents. Again, I'm not a financial advisor. This is all for entertainment purposes only. I have a disclaimer in all my descriptions and my videos. But look at these consistent dividends that are jumping up at a 3.13% dividend yield. And if you need to expand in the semiconductor business, this is a great dividend stock to buy because, semiconductors are in need right now. That could be why it jumped up so fast. But, keep an eye on this. Maybe a dip will happen, but this is one that I'm considering buying again. I hope it's not as expensive as this. I hope it doesn't jump to $86.50. But let me know what you think of this dividend stock. Again, if you were new to the channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I wanted to show you a quick video on my dividend portfolio and really discuss Seagate with what I like about them and how great they are as a dividend stock. It's really painful to sell these guys, but I want you guys to keep an eye out for this one. If a dip happens, awesome, but it's just blown up like crazy. Very good dividend growth stock. This is what I like about it. And, if I had the money right now, it's hard to say no right now. So let me know what you think. Any of you guys own Seagate other than Matthew Ramey? But let me know. Have you ever heard of Seagate? Are you into Seagate? Let me know. So you guys take care and have a great Thursday.